Hello traders and welcome back. In this week I'm here to give you another technical analysis, market breakdown and a forecast on gold. But before we do that, let me just recap what happened last week. So in the previous video on the 2nd of February I called out that the price will drop from 1860 down to the 1830 level. I expected a bounce back to break the upper trend line, come back and retest it and then continue its way to the upside. So you can see that analysis and forecast was correct, because from the 1860 level it dropped down to the 1830 where it found support. So if you go down to the smaller time frame, you can see that the price bounced back, started to go up. Let's go down to an even smaller time frame. You see that the price broke through the counter trend line, came back to retest it. So this move overall was a 300 pip win, because 3000 points on gold equals to 300 pips. And I always use predefined calculated risk tolerance levels, which in case of gold I like to use anything between 25 to 35 pips. So as you can see, I always limit the downside of any of my trades. So this trade was a 300 pip win with barely any drawdown, and from this level I expected gold to break to the upside, retest the trend line or breakthrough, but either way I was expecting a sharp move to the upside. So I entered the trade here. As soon as the price on the first trade hit the take profit, I entered into a counter trade, because the take profit level was also my buy limit level. So I took the opposite side. The price started to go up, broke the trend line, came back to retest it, but you see that the price closed above the previous low. So I was expecting the price to make some kind of market structure, making high highs and high lows. But the price had different ideas and broke through the 1830 level. So I lost 30 pips on this trade. And in the previous video, 2nd of February, I marked a second level at the 1818, which would have been my second entry, and I did place a buy limit on 1818, but you can see that the price again had other ideas, and so it broke through my stop loss. I got stopped out and I lost another 30 pips. So just to do a quick P&L, the first trade had 300 pips win, the second one 30 pips loss, and the third one 30 pips loss. So overall I was still up 240 pips. And if I have two or three bad trades, I just stop forcing it, because if the price doesn't go into my direction, I just let it go and wait for confirmations and other opportunities to enter. So later that week on Friday, price came back to retest the previous all-time high from 2012. So let me just do the monthly time frame. So if you look left, this was the previous all-time high before the summer, obviously, but this was an all-time high. The price broke through, came back and retested, bounced back up, and then came back to retest it again. So this shitty move stopped me out. But if you go down to the daily time frame or the smaller ones, because I knew that this level would be interesting and the price might bounce back, I was watching the price on a smaller time frame, and as soon as I saw a rejection at the all-time high from 2012, that's when I started to go down to a lower time frame. And you could mark your trend line, and you see that the price, there was a resistance at this level. Let me just delete this. So there was a resistance at this level, and as soon as the price started to consolidate on a smaller time frame, on the 15-minute time frame, I entered into a long position. So here, and obviously the take profit was this level, because you can see that there is a resistance. So on this trade we had a win of 131 pips, so that was a good trade. And as soon as I saw a rejection at this level, I started to enter into a counter trade on a smaller time frame. So I was scalping my way all the way from here to here, and as soon as I saw the first red candle, I started to take a short position, so the opposite side of the trade, and I tell you why. So if you go back to the daily time frame, sorry, the 4-hour time frame, no, the 1 hour, So you can see if you use the Fibonacci, swing low to swing high, you see that the price came back to retest the 61.80. So this was my other entry point, but before that this was my take profit, because remember I said that I entered into a short position on the smaller time frame as soon as I've seen a rejection of this level. Now this is a long, so let me just put this one. So I entered into a short position, stop loss above the previous high. So this was my take profit level, and you can see that the price broke through the trend line, but it failed to break through the market structure because we were making higher highs and higher lows. The price broke through, but it failed to break through the previous higher low. So it made a new higher high, higher low, and failed to break through the previous higher low. So I placed a stop loss, a buy limit at this level on the Fibonacci 7860, and look what happened. The price came back, bounced back immediately. So I entered into another long position from this area here, and the take profit level was the previous high. Now on this occasion I used about 15 pips of stop loss because I was expecting the price to come back to the 7860, so I was confident to use a smaller stop loss. And you can see this move was how many pips? This was 170 pips. So on this level we had 131, and on the way back up we had 170, so that's another 300 pip win. And then I took on a smaller time frame, so as soon as the price reached the previous high I took a reverse trade, but I got stopped out, and it was Friday, so I stopped trading, so I was down another 25 pips. But overall you can see on the top left corner of the screen how many pips we had in loss and how many we had in wins. So it's important to make a weekly P&L if you're a trader, because that's how you can measure and calculate your progress. But that's enough from the recap of last week. Let's see what I expect from gold this week. So I just quickly tidied up the chart. Let's go back to the daily time frame and let me show you something. So in gold you can see we have a strong horizontal support and resistance level with the previous all-time highs, and also we have a downward sloping or descending upper trend line. So you can immediately see that this is a triangle or wedge which is slowly starting to close in. So this week if you go down to lower time frame, I expect price to come back all the way to 1837, because remember that this area there was a lot of interest. If you look at this consolidation area, this is where the brokers were collecting the orders, and the brokers make money if they execute as many orders as possible. So if there any orders are left unexecuted at this level, then the price will come back because the brokers want to execute these orders right in this box. And remember that there are not just market orders on the forex or stock markets, there are limit orders, and there are also delayed orders from the clients of the big banks and institutions. So there are many clients and customers who do not give an exact order to the broker. They just say, okay, if the price hit around this level, then execute my order. But if they haven't been executed at this level, then you can be sure that the brokers will push the price back up to suck up all the excess orders and liquidity from this area. So in my scenario, I expect price to come back to retest this level around the 1837, and then I expect a drop or rejection. Then I expect a rejection from the 1837 level and the price to come back to this area, because you can see that there's a red candle. So there might an order block or a consolidation theory on this level. So I expect price to go back to 1837, then come back all the way down to 1805, making a new higher low, and then hopefully the price will push higher and retest the top trend line. There is a high possibility that the price will just move in a zigzag, because if you go back to the daily time frame, you see that we start to slowly close down this triangle or wedge with a strong horizontal support and resistance and a descending upper trend line. So there is a high possibility that the price will make some funny moves within this range. and go up and down, retesting different levels. Short term, as I explained, I expect price to retest the 1837 level, so there is a good long opportunity from this level, but there's not many pips, and you can see that this candle could pull back because tomorrow the daily candle needs to make a lower wick, so there is a possibility that the price will come back you know, to 1808, or it could just spike up straight away to the 1837. So that's why I'm not entering into long positions now, because we are in the middle of a move and you don't want to enter in the middle of a move. What I want to see is a rejection at the 1830 level. So once we see the rejection at this level, I'm going to enter into a short position all the way down to 1805. So as soon as the price hits 1837, if you see any rejection and price action, then I'm going to enter into a short position. And as soon as the price comes back, I'm going to watch price action here and enter into a long position. And the long-term bias, in my opinion, is that the price, just to recap, is going to move in this consolidation area up and down, and then it will break out either to the upside or the downside. Let me just zoom out to the daily. So either it will go break out to the upside, come back to retest it, and make its way to the upside. But there's another scenario where the price will just simply melt and break through to the downside, breaking through the strong horizontal support and resistance. Now, because we don't know which direction is the price going to go, do not force it. Let's just play around in this consolidation area until this wedge is closing down. And once we have either the upper trend line or the bottom horizontal line broken, I will make another video. Let me just set an alert quickly at this level. So I will send out to the private Telegram group as soon as any of these levels break, and then I'm going to make a new video giving you exact entry opportunities and trade ideas. Before we continue with gold, let's go to my website at alphafx.hu and check out the available discount on the basic plan. I'm giving away 50% off, well 40%, so instead of 249, now you can purchase the basic plan for 149, which is a reasonable price considering that you get lifetime access to the learning portal right here, which is packed with practical step-by-step learning videos where I explain my strategy and how to use technical analysis, which I've been taught during my years in hedge fund, banking and other institutional trading desks. Also, you get a price action ebook which explains how to trade and when to trade the market structure based on price action. Also, you get access, lifetime access to the private Telegram groups where I share all the trade setups and signals and my trade ideas to the private members. Also, you get access to the weekly webinars, market breakdowns, as well as the practice team calls. So if you have any questions, make sure you read everything about me. I have a page with all the financial background I have and the previous experience, some of the qualifications, or you can go to the contact button where you can find my private Telegram link and just send me a message and ask any questions. Until now, make sure you guys manage your risk, use a stop loss, do not risk anything more than 2 to 3%, and if you have any questions, you can go to my website, hit the contact button where you find my Telegram link, send me a message and ask any questions. Until that, have a profitable trading week, guys. Thank you.